Alright everyone, welcome back to the channel. So I just wanted to provide a quick update on what I think the next move for the SPX is. This is really just going to be a short form video. So if you do like these quicker videos between our regularly scheduled programming, let me know down below in the comments. But let's talk about it. What's the next move for the SPX? Well, we've previously pulled up this chart, but I have added some new support slash price gap ranges that I do think we're going to be heading down to in the immediate short term. And let's talk about this. Well, if I remove these orange boxes, these orange boxes are our 618 Fibonacci's, the double 618 fib, but we'll talk about that in a second. What I want to highlight is this is what we previously mentioned. We said, hey, we were in a rising wedge, we fell to the downside of it. If this is going to be bullish for the stock market, you would need to hold above your one wave. This is according to your Elliott wave theory, of course, where the candle body close for this one wave was round about this 3922 region. And once again, I previously said on this channel, if we close beneath this region, your 5 wave is going to be invalidated, and there's not going to be any chance, in my opinion, that we're going to head up to these higher prices. And that's exactly what we did yesterday. We finally did close. We closed at 3908, which is obviously beneath this candle body close for your one wave. So it seems like this one wave on the Elliott wave structure is now invalidated. What's the next move to keep our eyes on? Well, in my opinion, we should still be keeping our eyes on the Fibonacci that we previously talked about. So if I remove this green box and we can purely focus on this fib, if you're wondering where we get this from, if we draw our Fibonacci's from our low to our high of this most recent bottom in the stock market, you can see we've got a 618 fib right here at 3901. And then if we pull the Fibonacci from when the start of this rising wedge came about, and I'll pull back to that in a second, but you can see here you have another 618 Fibonacci target right here at 3952. We'll just call it 395 to make it simple for the rest of this video. But you can see this is basically what I'm looking at right now. Now, as the one wave for the Elliott wave theory is invalidated, that target is now obviously out of the water. But what we can look at is we can look at these previous support flip resistance ranges. Well, currently this is support. We're coming down to support. This was previous resistance, this was resistance, we broke above it and we flipped at support, and we're now coming back down into this region. Yes, we have invalidated the one wave structure on the Elliott wave theory, but if we do just say, let's not even look at this zone as a 618 fib, let's just say, hey, this is a big support zone, because there is also an argument to be made that from this candle body close and then from this wick and then subsequently also these regions here, this is previous resistance flip support, and this is where I see this overhead resistance coming in from next. So immediately in the short term, right above our head, 3952, I personally don't foresee us breaking above this region, but the SPY is having a slight bounce today while the DXY takes a breather. Why I'm saying don't be too worried about this on the daily time frame is look at the weekly time frame for the DXY. The DXY does not look like it is slowing. It looks like the DXY wants to continue up to 111. We have many of these times where we have daily breathers, the stock market rallies for a day and then it gets brutalized, and this is what I think is playing out next for the stock market. So I think we're going to close beneath this region, 3952, but the major capitulation unfortunately will probably not start happening until we start closing daily candle body closes back beneath 3901. And as you can see, we have daily candle body closes just above this region. So once again, if we're not even looking at this as a Fibonacci, we can look at this as a fib. This is also a support box, but right down here, 39, I would really like to see the SPX close beneath 3,900. Once that happens, I will be calling for these price targets. Now, what I'm currently looking at is these price gap regions, and I had a, if we go back to the key, I had a key for this down here. So these, I need to mark this as green. I should have done this before. Bada bing. Background, bada boom. There we go. So the green support box, obviously, without explanation, these are just support zones. And then these red boxes over here, these are actually price gaps. And if we clear this up, you can see there is a big old price gap right down here. And there is a big old price gap right down here. We formed many price gaps over on this. For example, you can see we formed one here, but we filled this. We formed one over here, but we filled this. We formed one over here. And this is the one that I highlighted that we need to fill. We formed one here, and we what's it called? We filled this. This one was filled. This one was filled. This one was filled. So all of these other ones so far have been filled. Even apart from this one to the upside, which will definitely be something to look at in the next bull market. But at least what we've got going on right now, this is where I see us coming down to. So in the short term, you know, we need about another 1% move to the downside to push us beneath this previous resistance flip support. And then once that does become support flip resistance, what I'll be looking for is a move down to the first price gap from where we are right now. This is going to be about a 4% drop, but from the breakdown of 3,900, this is about a 3% drop. Now, I do actually see us coming all the way down to the bottom price gap, which is going to mean a 5.6% dump down to 3,678. And I also do foresee in the future, in the next couple of weeks, for us to come down and take out these lows, which means from where we are now, we've got about another 8% move to the downside, and then we're going to be taking out the lows and then going below some. So I don't think there's going to be any slowing for the DXY anytime soon. I at least think we're coming up to 111, 112. These are targets that I've talked about for a while. If we do exceed these and we do just keep on rapidly moving up, bear in mind there is a massive cup and handle pattern for the DXY all the way up here, 6% move up. This would be meaning the DXY would be clocking just short of 117. So DXY looks like it wants to get continuation. When you look at everything else, the NASDAQ, the SPY, even, you know, in my previous videos, I've shown much more intricate charts. But when you just look at the basics and you look at the SPX, you look at the SPY rather, and then you look at the NASDAQ, I mean, it really just has to be as simple as this. You know, we're clearly in a downtrend, and in my opinion, at this moment in time, there wouldn't be anything to get out of bed for. So with the SPX, I am expecting about another 8% move to take place within the next 2 weeks, and I'll talk about why I think it's going to take place in the next 2 weeks in my next short form video. So what I've got for you today, my friends, if you do like these short form videos where we do just talk about one topic in a shorter video, let me know down below. But yeah, that's all I've got for you for this episode, my friends. As always, Cowboy out. Peace.